All right, let's talk about one of the most exciting, and let's be honest, one of the most nerve-wracking stocks out there, Palantir. If you've been invested in this company, you know exactly what I'm talking about. It's been a wild ride. And with a massive earnings report right around the corner, the pressure is on. So, let's get into it. First off, we have to talk about this number. Just look at it. A 133% gain since the start of the year. If you've been holding on, seriously, congratulations. That's an incredible run. But you know, whenever a stock climbs this high, this fast, it makes you wonder, can this possibly keep going? Or are we standing on a cliff's edge?
And that really is the big question, isn't it? This upcoming earnings call on November 3rd, it's not just another boring financial report. For Palantir, this is a moment of truth. It's where all the big talk and bold promises have to get backed up by cold, hard numbers. Get it right, and the stock could fly. Get it wrong, and, well, it could be a long way down.
So here's how we're going to break this all down. First, we'll quickly cover what Palantir actually is. Then, we'll dive into the bull case, all the reasons people are so incredibly optimistic. After that, we've got to do a reality check and look at the risks. And finally, I'll give you a playbook for exactly what to watch for on earnings day.
All right, first things first, let's start with the basics.
So what on earth does Palantir do? Well, in the simplest terms, they create software that takes these giant, messy piles of data and makes sense of it all. Think of it like a brain for a huge organization. They got their start working with governments and spy agencies, helping them connect the dots in ways a human never could. But now, they're taking that same powerful tech and bringing it to the biggest companies in the world.
Okay, now for the fun part. Why has this stock been on such an absolute tear? Let's get into the bull case and the story that has investors so excited.
The optimistic view on Palantir really boils down to four main things. First, and this is a big one, their growth in the private sector is just exploding. Second, they're still locking in huge, long-term government contracts. Third, there's a massive potential catalyst on the horizon, getting added to the S&P 500. And finally, you've got some very influential analysts who are just pounding the table, telling everyone to buy.
Now, what's so interesting here is that they're really starting to branch out. You know, for years, the biggest criticism of Palantir was that they were too dependent on the US government. But look at this! A huge deal with the UK's military shows they're going global. And this deal with Lumen proves that their new AI platform, or AIP, is a must-have for big corporations. And of course, they haven't forgotten their roots, still landing major deals like Project Titan with the US Army. And this chart right here, this is what has investors so fired up. Sure, the government money is steady and reliable, but the real story is their U.S. commercial business. I mean, they're forecasting 85% growth year over year. That's insane. It's all being driven by their new AI platform, and companies are lining up to get it. This right here is the growth engine.
And you don't have to guess if they're confident. Just listen to the CEO, Alex Karp. The guy's not shy. He's out there saying they're crushing it, and he's not just positioning Palantir as another piece of software. No, he says they are becoming the operating system for the entire age of AI. It's a huge, bold claim, but it's one that has totally captured Wall Street's imagination.
And here's the other potential game changer, getting into the S&P 500. Now, to get into this exclusive club, you need 4 straight quarters of profit, according to the official accounting rulebook, known as GAAP. Palantir already has 3. This next report could be number 4. And why is this such a big deal? Because trillions of dollars in index funds would be forced to buy the stock. It's like a guaranteed tidal wave of buying pressure.
Okay, deep breath. We've just heard the incredible bull case, and that story is powerful. But now, it's time for a reality check. We have to ask the tough question. Is all of this good news and then some already baked into the stock price? What are the risks? And here it is, the one number that makes even the most optimistic investor a little nervous, a price-to-earnings ratio of 615. To give you some context, a normal PE for a company in the S&P 500 is around 25. Palantir is at 615. That means it's valued at more than 600 times its yearly profit. By any normal measure, this is just astronomically expensive. So you see a number like that and you're probably wondering, okay, what does that actually mean? A PE ratio is just a quick way to see how much you're paying for a company's profits. A number this high means the market isn't valuing Palantir on its profits today. It's betting that its profits in the future will be absolutely gigantic. It raises the key question, how do you even think about a valuation that seems to defy gravity? Let me try a little analogy. Buying Palantir at this price is kind of like paying the full price for a brand new Ferrari, but but instead of the whole car, you just get the engine. Why? Because you're betting that this one engine is so revolutionary, it's going to end up in every single car in the world someday. It's a huge bet on the future, and that makes it a very high-risk, high-reward situation. And because of that crazy valuation, Wall Street is completely torn. You've got analysts like Dan Ives at Wedbush calling it a core AI holding with a price target of $30. Then you have Morgan Stanley on the other side saying, let's hold on a second, keeping their target at $22, basically saying all the good news is already priced in. When the pros can't agree, you know it's a tricky situation.
So all of this boils down to one word: pressure. The biggest risk is that extreme valuation. But you also have to remember they're still pretty reliant on government spending. There's also the fear of a wider AI bubble, and Palantir is kind of the poster child for that. At the end of the day, because the stock is priced for perfection, the company is walking a tightrope. It can't just meet expectations, it has to absolutely smash them. Every single time.
Okay, so we've heard the good, we've heard the bad, now let's make this practical. When that earnings report comes out, what exactly should you, the investor, be looking for to see which story is winning out?
Here is your 4-point checklist for earnings day. Number 1, revenue. Did they beat what Wall Street expected? And more importantly, did they raise their forecast for the future? That's called a beat and raise. Number 2, U.S. commercial growth. Is that key growth engine still accelerating? Number 3, the guidance. Forget the numbers for a second and just listen to the CEO. Does he still sound like they're crushing it? And finally, number 4, that gap profit. Did they get it? Did they lock in that 4th profitable quarter and clear the way for S&P 500 inclusion? You know, when it comes down to it, investing in Palantir isn't about being a bull or a bear. It's about understanding the two powerful forces at play here. On one side, you have this incredible, world-changing growth story. And on the other, you have a sky-high valuation that demands absolute perfection.
And all of that leaves us with the one question that really matters. Is the future that Palantir is building so big, so revolutionary, that today's supercar price tag will look like an absolute bargain a few years from now? That is the investor's dilemma.
Now, we're not going to get the final answer all at once, of course, but we are about to get the next major chapter in this incredible story, and it all starts to unfold on November 3rd. Thanks for joining me.